Good afternoon, everyone. Let's. So this is the session where we are going to talk about the intraday trading sessions and intraday trading setup. Maino, Redmi, can you please mute yourself? The one who is having the name Redmi. It's generating a lot of background noise. See, today we are going to discuss some of the intraday trading setups. Before getting into the session, let's quickly talk about. Let's try to revise what we know about inventory, right? So, trading inventory conditions. Okay. So, in what are the case an inventory will get long to too long? Can anybody list it down? What are the ways an inventory can get long to too long, and what does it means? Because without knowing the inventory conditions, we cannot talk about the intraday setups, and we don't know. I mean, you cannot justify why it is happening. So let's be everyone on the same page. What are the ways an inventory can go long to too long?
When the short-term traders are piling up all their stocks, a continuous POC is being formed.
Yeah.
We can see a consequent POC is being getting developed by the short-term traders.
Okay, one is back-to-back. We call that as a back-to-back prominent point of control. Back-to-back prominent point of control, right? So point of control, which represents what?
That short-term traders are piling up their stock inventory.
Short-term traders are piling up. So anticipated reaction is inventory adjustment. Or we can also call that as an inventory correction. Right. So back-to-back prominent point of control. It usually it forms something like this. It forms a back-to-back prominent point of control on the long setup. So there'll be a lot of activity happens. Market has a lot of activity in this band. Right. It forms a PPOC. And one more back-to-back prominent point of control. Market forms an PPOC. And the anticipated reactions is like you have to wait for the trade setup to kick in, right? So maybe next day, if price opens inside the range, you can think about shorting to trade towards the PPOC, right? So that is where you can use this, because it's one of the way where the inventory is getting long to too long. But tomorrow, you have to let's say instead of doing this, instead market opens gap up. What one have to do? One have to wait for the sentiment to change. When the price opens gap up, it indicates high confidence. So it's not a better place to trade. Maybe you have to wait for something to change in the markets. If something is not changing, maybe that day could even become an one more prominent point of control, right? So in that case, it becomes a 3 prominent point of control in a row. In that case, still the context remains the same. The expectation is towards the clearance of most of the prominent point of control. You'll be seeing an inventory adjustment coming from the markets. Most of the short-term players must be going out of the markets, right? So one of the example what we had seen, the classical example what we had seen is from the HDFC Bank, right? And I'm going to show you that before that, but first let's discuss into the inventory conditions first. At times, very rarely what happens, this prominent point of control can go up to 4 in a row. That is the maximum I had seen so far, right? So in the last 5 years of my market profile trading career, continuously prominent point of control forming in a row is 4 prominent point of control coming in a row that is itself a signature that the inventory is getting long to too long. So in that case, it will be happening like this. So that there will be a prominent point of control, there will be PPOC. Next day, this prominent point of control will not get cleared. And again, there is one more prominent point of control formation, one more prominent point of control formation, one more prominent point of control formation. So all these are indication that inventory is getting long to too long. What we can expect is a deep correction can be anticipated. This could take anywhere between 3 to 7 trading days. Like, it's a rough estimation, but 3 to 7 trading days, it will be trying to take most of the prominent point of control. At times it takes in a shot. It takes in a shot, again moves up, again takes in a shot. Right? So there are two ways it can. One is a straight slide. It clears all the prominent point of control. Second one is a stage by stage clearance. First it clears most of the 3 prominent point of control in a row. Again bounce back. Again it try to clear the remaining point of controls. So can anybody explain what is a prominent point of control?
Sir, it is
more than 10 TPOs.
Yeah, prominent point of control is more than 10 TPOs, and it is a fairest place to conduct business, and it acts like a magnet. It acts like a magnet. Okay. So second thing is
it should be more than 10 or equal to 10.
Equal to 10 or 10 plus.
Okay.
It's supposed to be equal or more than 10. Okay. In that case, we can consider that as a in that case, we can consider that as an prominent point of control. Okay, let's talk about the next trading condition. What could be the possible next setup when it comes to trading inventory conditions? One is back-to-back prominent point of control. It could be 2 prominent point of control, or a 3 prominent point of control, or 4 prominent point of control.
And it should be a poor lows should be formed
in the form of multiple poor lows.
Yes.
Right? So multiple poor lows. We call that as an exponential poor lows. Exponential poor lows. So these are the signature that again only short-term players are in control in the entire trend. We already talked about this. Exponential poor lows or poor high. Poor high. At times it could be a combination of poor lows or poor high plus prominent POC. Okay, prominent POC. All are uncleared levels, uncleared or untested levels, It's something like you got an poor low here. That is one of the day we got a poor low, and another day we got one more poor low. So it price comes and clears exactly touches the day's low and it forms a poor low. One more day, price shoots up, it comes and touches exactly to the day's low, and again it bounces back. It forms a poor low. So these poor low, if it is more than 4 poor lows in a row, not necessarily it has to come in the same day. It can come on, let's say, some more day, some activity happened over here. One more day, one more activity happens over here. And one more day, we are getting an exactly some poor low again. So if the poor low is getting more than 4 or more than 4 it is getting, we call that as an place where all the short-term players are getting long to too long. In that case also we can expect short-term corrections. The short-term corrections also go anywhere between 3 to 10 trading days. Completely, the entire trend will be back down to clear all the poor lows, right? So before trying to do something else, market will tend to correct all those exponential poor lows. We already seen many examples on this, but whenever these kinds of combinations are coming in, it is a sign that the inventory is getting long to too long, right? And what are the other ways we can identify or we can justify that inventory is getting too long?
Stealth action.
Stealth auction, yeah. Stealth auction. Can anybody explain what is a stealth auction? What does it means and why the inventory gets long to too long?
So each bid have a one-time framing.
No, one-time framing is nowhere related to stealth auction. A stealth auction is something like it's a fake recovery. The market tried to fall, like something it happened in Nifty yesterday. Market was initially it was dropping, letter A, letter B, and letter C it dropped, right? But then middle of the day, what happens? It started recovering back again. It tried to attempt to a fall. It is not able to fall, but it established the first low here, a first lower low, and it also established second lower low. It again rallied faster. And again, market tried to fall here, but it's not falling, but instead it made a third low. It made a third low, and lately it recovered. Right? It haven't recovered much, but it recovered very close to the day high. But that is how a recovery will be. At times the recovery will be steep. So these are the signs that inventory is getting long to too long. All these players are intraday short sellers. All these are intraday short sellers. They are trying to push the market down, but nothing is happening in their favor. So out of anxiety, everyone is trying to cover their positions. So this is a stealth auction. The reverse auction will be looking like this. Market tend to go up. They will be intent to fall. They will not be able to get it. And then they'll rise. Again, they'll intend to fall again. Again, they'll intend to rise. And then finally, there'll be a steep fall. This is again, and continuously the market will be forming in higher highs. One higher high, two, or three. At times, it can go up to four also, four lower lows. You'll be able to see that from the profile. Right, so stealth auction is one way where we can say that it is one of the signs where it's an intraday recovery. This is an intraday recovery, which happened in Nifty is an intraday recovery. But one of the signs where we say like the inventory is getting long to too long. Again, the end result is a positional correction. Not necessarily it has to be happen from the next day itself. Next day, market could open also. Market open higher, and then it could correct from there also. That possibility is always there. So maybe I'll show you the stealth auction which happened on Nifty last week. In the meantime, we'll also discuss about other setups as well before, just to get a hang that we are in the proper page, so that everyone is on the same page. What are other ways inventory gets long to too long or short to too short? Okay, if you haven't remembered, G2, G3. So G2 setup, right? So G2 or G3 setup, G2 or G3 setup, plus some of the surrounding factors. We cannot just only say G2 alone is not an indication that it is inventory is getting long to too long. Maybe G2, G3 plus other factors. For example, I can take HDFC Bank as an example here. Maybe I'll pull up the charts better. So I think many people miss the videos. I think if you haven't crossed the inventory, trading the inventory conditions, this is one of the most important topic. If you haven't, if you missed it, or if you haven't given more importance, just go back and give most of the importance, because most of the intraday setups depends upon this conditions. That is why I'm reiterating again here before getting into intraday trading setups. Okay, so Let me try to connect to the data. So look into yesterday's trading activity here. So market was falling down. It established a first low, and then it establishes a second low, and it establishes a third low, and it keeps going up. Despite market was trying to fall every time, and then it moves up. Again, fall every time, it moves up. Again, every time it tries to fall, and it moves up. So these are the indications that the inventory is getting long to too long, right? So this is one information that you are going to look into. Markets are, we are very close to the top, maybe, right? So maybe we are very close to the top, but at the same time, it's not ended. It's not ended because we are having a weaker high over here. What is a weaker high? What is a weaker high? Can anybody explain what is a weaker high?
The market will revisit again, sir. On that.
What is a weaker high? First of all, what is a weaker high? Weaker high will be revisited, but why it is a weaker high? Why we call that as a weaker high?
Maybe like more than two characters, two TPS coming out there.
Sir, actually, it's
not
only single TPO is there. Other say B or C is not traced.
Okay.
That is subsequently we have to see the 3 days where the TPOs are have not crossed single TPOs. So there is a poor highs, and subsequently when we see there's the same line which has been drawn. So we have to. It's in
the way you people are articulating, I'm seeing only one thing. You people are again and again trying to see the price. What I'm trying to say is, I'm try to look from the context perspective how the other traders are thinking. Okay, what I am saying here is on yesterday's trading activity, 18th Jan, price opens very close to the previous day. It went up and testing the 2-day high. It went up testing the 2-day high, right? Price went only 1 point higher, only 1 point higher. You getting my point? Somebody is watching that 2-day high, price shooted up just 1 point higher, and somebody is selling exactly from there. What kind of trader they could be? It's a trading money. It's a trading money. Only dumb money trade like this, right? And that is why it is prone to revisit. That is why it is prone to revisit. Market in a very short term, it can revisit. So combine these two things. We have a stealth auction here. We have a stealth auction here, right? So there is a stealth auction 1 and 2 and 3. And price shooted up, not much, but it is a kind of a stealth auction. It is a kind of a stealth auction. It is a prominent point of control. Prominent point of control means that particular day it is controlled by short-term buyers. Price went up marginally, and we have a weaker seller at the day high. Inventory is getting long to too long. Now, in this case, what you can expect? Can anybody say what you can expect? So this is a given scenario. This is a given scenario where we have an inventory getting long to too long. That is why I said like it's a stealth auction. It is a stealth auction. How do you frame a view here? When there was a stealth auction, there is a weaker high, there was a late rally. What you can anticipate from the markets what could be? How do you frame in your mind like what could happen on Monday's markets?
Market will go up from here in short term.
The short-term uptrend. Why?
These are you told that here prominent POC and stealth action and weaker high. So
Yes.
price will go and touch retest this weaker high.
The price will initially go and test the weaker high because market always like to take care of the current business. Current business is nothing but stop hunting. They will go and hunt the stops, or they will go and revisit the point of control. First thing is, wherever the stop is there, they will go and hunt it. So usually this is supposed to happen on Friday itself. If Friday doesn't happen, that auction will continue on Monday. Right? So first thing is it will do a stop hunting. But at the same time, you have to remember that inventory is getting long to too long. And then the very first thing is they will come back and revisit prominent point of control. Because inventory went long to too long, now it is dangerously long. So it also creates a look above the balance and fail. We have a balance here. This is a 4-day balance. Last 4 days of trading activity happened in this block. Right? So in that case, it is a look above the balance and coming back into the balance. If the price is coming back into the balance, now what will be the targets? What are the possible targets you can estimate from here?
PPOC first one.
First one is the prominent point of control, right? So here is the prominent point of control. That will be your first target. That will be your T1. What should be the T2?
4-day balance low.
4-day balance low, exactly. Because it is a look below the balance and failure. So your T2 will be something like this. Maybe this is the kind of auction I'm expecting on Monday, right? Based upon what is setting up, what is there. So this is one way I'm thinking about the auction could possibly come up like this. Right? So because the inventory is getting long to too long here. Inventory is getting long to too long here. So first thing is we are expecting a bullishness. Second thing is we are expecting a price to come back to a prominent point of control because prominent point of control acts like a magnet. Why I am thinking like this is because the inventory is getting long to too long. This is one of the possible scenario I can think over here at this time. However, let's say, despite that, market shooted up, but it is not willing to come back inside the range. But instead of coming back, it is trying to shoot up, and it started doing more activity on the upper side. So what does it indicate? The markets are not willing to correct. Maybe it's not today. It should be some other day. But if it's a weaker auction, they shoot up, but immediately they come back into the range. That is one of the place where you can initiate short for initially towards point of control and towards the lower 4-day balance, right? So that is what that is how we can we have to deal with the inventory getting long to too long. Not every time inventory getting long to too long is an immediate short. You have to see with the maybe it could be if this long, if this high is not a weaker high, instead we have some good high, then maybe we can think about shorting here itself, right? So, but when you're having when the high is not proper, when the nearest auction is not proper, it is okay to wait for one more day to take a trade, right? Or let's say if despite this weaker high, market opens inside the range, what one should do? Market is opening inside the range, and in that case,
have to wait.
What is it?
We have to wait.
You have to wait. Yes, you never know whether they might go and take the prominent point of control, or they might be taking the weaker high. You never know. But if they open inside the range and they are going and taking the weaker high and they are coming back, that is again a sign of a indication that you have to go and trade this, because that will still again look like a look above the balance and fail, right? So it is more of an adjusting thing based upon what market is doing right now. Accordingly, how you can react to the markets, what you can anticipate from the markets. When it is opening inside the range, it is a more of a thing that we are dealing with a low confidence environment. Maybe you have to wait for the opportunity. The opportunity may come when you are seeing a 4-day breakout failure. So price could break the 4-day balance. I mean, it's not a 4-day 4-day breakout, but it is a 4-day balance breakout, and look below the balance. It is a failure. Price immediately goes to the other destination.
So even if the price gets accepted above the week high, later point of time it will come and visit the peacock and the balance.
Yeah. Now the odds are there because the inventory is getting long to too long. The inventory previously it never went to long to too long, at least in the last 7 trading sessions. Now one of the plays where we can say like its inventory is getting long to too long. You have to deal with caution, and moreover, most of the swing tops comes at an 4-day balance. So 4-day balance is there. So one of the plays where we can possibly expect a top here, right? So and moreover, so far the option data is supporting, and maybe they won't give up 11,000 that easily, right? Or in a worst case, what happens is initially they could a drive. A period could be a lot of drive. So they might take a lot of time to come back. They might come back and they might be doing a lot of activity here. That is also, and lately they start accepting into it. That is also a sign that you have to go with a trade. You have to take a trade here at the end of the day. You have to take a trade here because last 45 minutes is very important. Whenever the price is doing more than 6 TPO activity, more than 6 TPO activity at a key reference level, last 45 minutes matters. Last 45 minutes the price is coming down and it's an immediate short for the next day. Can expect price to come down and clear that 4-day balance, right? Okay, so what are the other ways inventory could go long to too long or short to too short?
Sir, in this one question, is there like the POC of can you just show me the maps? Sorry, this one, sir. So the 16th one PPOC was cleared by 17th Jan, right? The 16th Jan POC was cleared by 17th Jan.
Yes.
So how can we consider like
it's not a PPOC? Okay, 16th Jan, this one. Yeah.
Sir. So this one was cleared by 17th Jan PPOC.
Yes.
And 17th was already cleared by 18th.
17th is not a PPOC.
Okay. So, but the 16th was cleared by 18th, right? Then
16th PPOC is cleared by 17th itself.
That's what, 17th. So how can we say that it's getting long to too long, sir, in this? Because when we see
we don't say here because there is no sign that inventory is getting long to too long over here. Because of you have only one prominent point of control, we don't say inventory is getting long to too long.
Okay, fine, sir. Thank you.
Right. So and moreover, it has to be combined with the top-down analysis also. Right. So from the top-down analysis, what we got. So it is always not one information. One information is a trade setup, right? So whether to take a trade or not, you have to look into the surrounding factors also. You're getting my point?
Yeah, fine, sir.
So let's take this example here. Let's take this. So in Nifty, we got a balance sometime back here. I'm just trying to get that charts. Nifty balance, yeah, it's here. So Nifty is balancing over here, right? So we got one support level here. Market came very close to that. The difference was only 9 points, and from there it bounces back. And now it is forming one more balance over here. It's kind of a 4-day balance, right? So Jan 15, if you take from Jan 15, it was balancing from here. One more balance is getting developed, right? So again, inventory is getting long to too long. It is nearing the edge. Most of your best trading activity comes whenever there is a look below the balance and fail. That is one of the key intraday strategy as well. Look below the balance and fail, or look above the balance and fail. And especially if you look into this, look below the balance and fail. This is a balance here, right? This balance was running for almost 1, 2, 3, 4, 5, 6, 7, 8, right? So almost 8 trading days, the balance was running in. And one of the day, price went down. Anyone able to recollect why the price has to go up? Why we said like price has to go up from the profile perspective? Price went down. They broken the balance. In fact, they broken the 8th day low. The 8th day low got broken on 13th of January 2019. But why we thought about the look below the balance and fail? We thought about look below the balance and fail because of the surrounding factors. If you look into the surrounding factors, one of this day is a poor structure. That is a poor structure that says that even if the price goes down, price can come back into the range because there is the odds that the poor structure can get cleared. Maybe I'll show you the poor structure from the market profile charts, because it is always never an one information, always never one trade setup. It's a trade setup plus surrounding factors, right? So let's go back and look into how that particular day pans out. So try to compare side by side. 11th Jan, we got a poor structure, right? So what is a poor structure? We have more number of anomalies. 1 anomaly, 2 anomaly, and 3. And okay, I have to zoom it out. There is one more there inside 4, right? So there are total 4 anomalies over here. Total 1, 2, and 3, and 4. Total 4 anomalies indicates poor structure. It has all the odds. All are emotional sellers. They push the price to the edge of the balance on 11th January. 14th January, we got a breakdown, right? So it's a multi-day breakdown. Most of the multi-day breakdowns are fake breakdowns, right? So that you have to keep it in memory. I'm going to classify which multi-day breakout is a good breakout and which multi-day breakout is not a fake breakout. That is also a part of the intraday trade setups, right? So here the price is plunging down. They broken the multi-day low, but then lately price started coming back into the range. That particular day, price ended very close to the day's range. So price close to the day's range. It's still not a look below the balance and fail, but lately there was a recovery. The very next day, price opens inside the range. The price got back into the range, right? So price was back into the 4-day range. It is an immediate long. We talked about this on 14th January itself. We talked about the scenario, but the scenario got live when the market started opened on the 15th January. Right? On the 15th January, what happened? Price got back into the range. It is an immediate long. Without any thinking, you have to go with that because the market goes to the balance really fast. At times, it takes only 2 days to go and get it, but they got back into the balance. Price went up, they got back into the range, and they opened gap up. It is an immediate long. Even if you are not able to, if you don't want to get into this trade, next day you still have an opportunity to get at the opening itself. Right? These kinds of trades you have to be really aware at the open. When the price broken down the balance, coming back into the range, or price opens inside the range, inside the 4-day balance, it is a sign that they are going to go to the other side of the balance. And that was a significant trading opportunity. It's closely 100+ points trading opportunity at the opening itself, right? Even if you miss this context, right, you still have a market would have been given you more time to put you in the right mode, because those kinds of moves happens really fast in the markets. Okay, so first, when the price is going outside the balance, first you need to think what is the odds that price could go back into the balance. Is it possible or not? If it's not possible, then you have to think about whether there is an acceleration could happen or not. And acceleration is a sign of a strength. An acceleration is a sign of a strength. Let's say if there are no poor structure here, if there are no poor structure over here, or if there are no weaker references over there, then I'll be thinking about a plunge. I would have been thought about a plunge. Since there are a couple of weaker hands available, there are a lot of weaker hands available over here, weaker hands. So all the thing is that when the price is going up, go and try to fade the single prints. Go and try to fade their weakness. And again, look for the target destination. The target destination is towards a 4-day balance. Now the same thing applies over here. Now the inventory is getting long to 2 years. This is a place I'm getting inventory getting long to too long. In fact, it is a 4-day balance also. It's a 4-day balance. We are at a major swing high. So even if, and there is the day high is a weaker high. This high is a weaker high. So I'm expecting this to break up. But at the same time, it is a 4-day balance. Inventory is getting long to too long. Option writers are at 11,000 levels. So they could come for a defense. I don't know how big the swing is going to go. It could, maybe if at all they want to excite everyone, it could go as high as possible. Or they open and then they come and reject. What I want is a rejection. What I want is a rejection to take a positional shots. To take a positional shots, to come back and expect a support one more time. Maybe initially towards the prominent point of control and towards the other side of the balance, and expecting a test over here, 10,850. If they are not willing to go up, it's an immediate cut your positions over here without any thinking. Right? Are we clear with this? Why we are expecting price to come back into the range? We are expecting initially price to break up because this high is a weaker high from the market profile. But at the same time, we are also expecting price to come back into the range. If the price is not come back it's not getting back into the range, maybe the auction might get delayed for one more day. And then again, we have to check where the rejection is happening. Let's say the auction drive up and they started moving up, right? So throughout the day, they are not willing to come back. It is not a short at all. You don't need to look for shots. Maybe something different is happening. If you don't know what is happening, just keep watching. Don't do anything in the markets. Okay. So that is that's what I'm going to say. Like, that's my first trade setup. First trade setup is look above the short-term balance and fail. Right. So look above the short-term fail. Target is towards the other side of the balance. Okay. So what I'm going to do is I'm going to when you are looking into this, how to analyze the setup. How do you know that? First of all, what knowledge you have to know is, how do you know price is going to get back into the balance? That is, look above the balance and fail, or look below the balance and fail. How do you know that this is going to happen? So this is going to happen only if you have a proper understanding about, let's say, weaker structure. So to know this, you have to know a knowledge about poor structures. Maybe because of poor structures, price could come back, or because of inventory conditions, long to too long, or short to too short, inventory conditions. Or maybe it could also come in the form of AB power lows, or it can also come in the form of a failed auctions, or it could also come in the form of a G2 high or G2 low, or G2 low. So if you know this, if these combinations are there, and price is going above the balance, above a short-term balance. I said like I'm putting a short-term balance over here. That means I'm talking about something on a 30-minute time frame. Balance on 30-minute or balance on 15-minute charts. If you go to a 30-minute chart or a 15-minute chart, if you're seeing a balanced activity for last 3-4 trading sessions, most of the balanced activity is mostly controlled. These kinds of balanced activity is mostly controlled by short-term players. The short-term players are the one who is responsible for these balances. And most of the short-term activity happens at the edges. Most of the short-term activity happens at the edges. Trading money usually comes to trade at those locations. Something like trading money was involved over here at these edges. Likewise, trading money would have been involved in pushing the price down, and they are the one who is pushing the price up. All are short-term trading money, because if you look from the context itself, monthly is balancing, daily is balancing, weekly is balancing, all are balancing. So short-term players are only in control in this market. So the edges are mostly dominated by the short-term players. So when it is taking out and coming back, that is a sign of a low confidence environment. So in the low confidence environment, market allows you an opportunity to short the markets. Maybe more activity happens. That itself a sign that we are going to go back down below 10,840 levels, or maybe 840 levels is what we can anticipate. Most of the time, if there is a look above the balance and fail, usually it is a sign of a weakness in this scenario. Not every look above the balance and fail is not a trading opportunity. It is a trading opportunity here because we have a clues that inventory is getting long to too long, and we are at the edge of the markets. Right? So initially we are expecting bullishness, and then later we are expecting a bearishness over here. Okay, fine. Let's. Are we clear with look above the balance and fail? Now the second thing is we are going to look into the look above the balance and accelerate. Look above the balance and accelerate. So I'll try to get an example here. Bank Nifty, there was one, I guess. Look into this scenario. How they are breaking it matters over here. Let me go back to the zone. So there was a broader balance. You can see there was a broader balance. Again, there was one more look above the balance, look below the balance and failed. The price looked below the balance and it failed, got back into the range. That itself a sign that it goes to the other side of the balance. If you look only this part, up to this part, price would have been balancing for almost how many days? Almost 15, 16, 3, 4, 5, 6, almost 7 trading days. 7 trading days it was balancing. And one of the day it looked below the balance. You can easily see from that range. Probably you'll be seeing only this zone when you watched Nifty around, Bank Nifty around those zones. You would have been seeing only this information, and you'll be seeing that price would have been broken down. And now price started coming back into the range. It's trading into the range. It is a sign that 1 or 2 days. This took only 2 days to reach this zone. Another 2 days, another 2 trading days, they are at the back of the zone. And that is again, this is a 400-point trading opportunity. At times, the opportunity in Bank Nifty can go up to 400 or even 500 points if balance is going to happen. Again, when these things are happening, you need to assess the odds of price balancing over there. You have to assess the odds of price getting back into the balance. Why the price has to get back into the balance? That you have to assess, especially when the price is breaking a multi-day balance. When the price is forming a balance, the price breaks down. First thing you have to do is there a possible chance that price can come back into the balance? Why it should come back? That is the first analysis you have to do. The second analysis is whenever you're looking for a look above the balance and acceleration, you'll be seeing a lot of trading activity, a lot of choppiness around this upper balance. Again, goes back. Again, a lot of choppiness, a lot of activity. You're going to see this at this 4-day balance. Right? Those are the signs of an acceptance. Those are the signs of an acceptance. So at times it breaks. It breaks sharply. Activity starts developing higher. That is a sign of an acceptance. That is a positional longs. Right? So these will be the look above the balance and accelerate. It's not going to come fast. It is not a trading intraday trading opportunity, but it's going to be a positional trading opportunity because most of the uptrends will be slow and steady. It's going to accept. So there are two ways it can accept. One is they break the balance and they do an acceptance, and then they're going to go up. It's not an intraday opportunity, but it's going to be a positional opportunity. At times, what happens? They try to look down below. Again, they come up. They do a lot of activity at the balance reference. You see that a lot of activity is happening at the balance edges. If you mark that upper balance, let's say I'll mark the upper balance over here. So once, twice, price has been touched over here. When the price is breaking up, again activity happens. Again, it plunges down. Again, activity happens once, twice, thrice, 4, 5. Again, it went up. Again, it's coming and testing the balance. So these are more the time price is going to spend at the balance. If you're seeing that, that is a sign of an acceptance. That is a sign of the acceptance that this market is not a weaker pattern. So again, you have to go with the direction of the continuation there. There is no most of the rejections on the downside, it will not do that this kind of activity at the balance. They don't do that. They got back in. Once they got back in, so again they are in. Most of the time price is spending inside here, whereas most of the time price started spending outside there, and a lot many times price is touching at the upper balance. It is a clear sign that it's acceptance coming in, and look above the balance and accelerate is it's a sign of a strength. It's a short-term sign of a strength. At times it could be positional opportunity. At times, most of the times it is not an intraday opportunity. Most of the time it's going to be a positional trading opportunity. Look above the balance and accelerate. So second one is look above the balance and accelerate. Any questions on this? Look above the balance and fail, and look above the balance and accelerate.
No question.
Okay, so what you have to look out for is acceptance. Acceptance above short-term balance. Short-term balance. You can also use either 30-minute charts, 30-minute or 15-minute chart to identify a short-term balance. So this and it is a positional trading opportunity. First of all, it is a positional trading opportunity. What you have to expect is no weaker references below the balance. Means when the price is coming up, that there should not be any AB poor low here, and no signs of inventory getting long to too long, no stealth auction here. So it should be coming really clean. There are no weaker levels. Not price. Let's say one of the days prominent point of control is there. Price comes and touches exactly prominent point of control and moving up. There should be no such weaker references. To put in a simple manner, no weaker references. Price has to clearly going up with a sign of a strength, and it does a lot of activity over here, a lot of acceptance, and then it started moving up. Those are the signs of a good trending markets. It's a good trending markets, right? So the auction should be really strong. So you have to look for a stronger auction. Stronger auction when the auction is developing upper, it should not create any poor structures, or it should not create any other weaker references. In such a way, it can use that as an look above the balance and accelerate. Right? How many days we have to look for the balance? There are no rules. Like the balance can keep on going for 7 days, also 8 days, also 16 days, also it can keep going up. So there are no rules on how many days the balance could go up. As long as the balance price is not breaking the balance, only short-term players are in control. This particular balance, it went on for almost how many days? Almost then it consumes half of the month. It has been consumed over here, right? So there are no there are no indication that this balance has to be only 5 days. Most of the short-term balance can go anywhere between 5 to 10 trading days, or even 4 days. So 4-day balance, anything above 4-day balance has to be given an I here. This balance over here, it extended for almost 1, 2, 3, 4, 5, 6, 7, 8, 9, almost 9 trading days. And the current ongoing balance, it has been extending for 7 trading days, right? So all these are signs that, and moreover, now we are getting a weaker auction here, especially when there are two balances are overlapping to each other, right? And those are the signs that it is a weaker auction. Whatever it's happening on a broader scale level, it is a weaker auction. So this is a weaker auction. So if the price is breaking down, if the price has all the odds of breaking down in Bank Nifty. So we already talked about this. Still, we have a lot of weaker references. We have a lot of weaker stops. Okay, so now let's move on to the next topic. So next topic is all about monitoring the ABC activity, right? So under ABC setups, under ABC setups, we have a variety of trading setups. All these setups are meant for intraday players. So ABC setups, first one is ABC multi-day breakout. Let's say like multi-day breakout with serious elongation. So these kinds of setups usually comes like this. Let's say we have a previous day high and a previous day low. Previous day high and then previous day low. And we have one more high, 2-day high and 2-day low. 2-day high and a 2-day low. Or it could be multi-day high, multi-day low also. When the price is breaking, how it is breaking the multi-day high at the ABC period matters. Let's talk about case 1. Case 1, price opens over here inside the previous day high. Inside previous day high, price opens. It broken at A period. It had broken. B period, it broken 2-day high. And C period, it broken. It was going really fast. It's going really fast. Like there's a bigger breakout. It's happening over here. From intraday perspective, what one have to look out over here? Is this a sign of a strength or is this a sign of a weakness? This is B period. B period crossing 2-day high, and C period is crossing. C period is completely above 2-day high. 2-day high or a multi-day high.
Sign of strength.
No, it is not a sign of strength. It is a sign of a weakness. It is a sign of a weakness because most of the multi-day highs are done by weaker hands, right? So mostly
One time framing, sir, for price is one time framing.
Yeah, price is one-time framing, but it is a ABC elongation with a multi-day breakout. One of the place where the intraday players get long to too long.
Oh, okay.
Maybe positionally it is a different thing, but from an intraday perspective, there are a lot of single prints at B period and a lot of single prints at the C period, and it is a multi-day breakout. That multi-day breakout is the key here. Okay, multi-day breakout is the key here. It is a sign of a weakness from an intraday perspective, not from a positional perspective. We are not bothered about positional perspective. From an intraday perspective, it is a weakness. What you can expect here is that you can expect some momentum along exhaustion setup. That exhaustion can come in the form of a hammer pattern. You can anticipate a hammer there. You can, so that you can take a shot to clear those C period single prints and a B period single prints. So once it gets cleared, you're out of the game. That's it. It's a pure intraday opportunity that gives you a maximum intraday trading opportunity to trade the market peaks precisely. Right? So to summarize here, so what to observe when ABC pattern is developing with a multi-day breakout, right? So A period should be trading below multi-day low, B period and C period shooting with greater momentum, either up or down, it doesn't matter. Momentum followed by momentum exhaustion, So the momentum exhaustion, you can identify momentum exhaustion in the form of hammer, or you can also identify in the form of a order flow R delta. I guess everybody attended R delta trade setup, right? So our trade setup at the peaks
It's a hanging man, right? It's not a hammer. Hammer is a bullish signal.
Yeah, it's a hanging man. It's kind of an hanging man or an inverse hammer. It's not a hammer, but I would say it's an inverse hammer setup. I don't know. I'm not sure whether there's an inverse hammer kind of pattern is there or not. But in market terms, or a hanging man, okay? Hanging man. I'm really bad at those candlestick patterns. Hanging man. Yes, let me check once. Or kind of a pin bar, right? It's a hanging man. A hanging man pattern. Let me check this. No, this I'm not talking about a hanging man. It's not a hanging man. I'm talking about inverse hammer. Then inverse hammer.
Inverse hammer.
Yeah. Okay, something like this. I'm talking about something like this kind of elongation. I'm talking about. So it comes at the that 5-minute high or a 3-minute high. If you're watching, you'll be seeing an inverted hammer over there. So those are the, and if you look from the order flow, the day high will be, and you'll be getting a signal R delta signals over there, right? So it's not a hanging man. It is an inverted hammer setup. Inverted hammer setup. Right, so those are the indications that it's a momentum exhaustion is happening, or the momentum exhaustion you can identify from the order flow also in the form of a R delta. Right, this is one ABC setup. It is a what? It's a mean reversion pattern. Mean reversion pattern. Okay, next comes the sign of one more mean reversion pattern, which we seen in yesterday's markets. Right, so again, it is a multi-day breakout. It's the same multi-day breakout, but the mean reversion happens in the reverse way. Now let me narrate first, then we'll come go to and look into the charts. Okay, here we are. Let's say we have the same auction here. Let me erase it, everything. Okay, we have a same multi-day high. Price is breaking multi-day high. Price breaks multi-day high. It breaks at A period. It breaks. This is letter A. It broken completely. Price was outside that multi-day high, and price started falling down. Price again. It got back in, and price went down to the other side, and it completely went to the other side. But it haven't broken the previous day low. It was a B period. It is a C period. Now, tell me about this case. What it is? What is happening here? Who is responsible for what? In this case, price opens gap up, or let's say even it opens inside the range. It took a 2-day high. Price got in. The range was very bigger. It was completely just falling down. B is completely falling down. C is also completely falling down. Like crazily, madly, price is falling down. If you look at the Nifty would have been opened some 40 points higher, but they would have been lost almost all the 40 points, and even if they went negative, another 60 points. So total there was a 100-point crash, which was happening in a matter of 1.5 hours. All the letter A, letter B, and letter C, all are elongated structures. In such a case, what is happening over here?
Low buyer's confidence.
Yeah, it is a low buyer confidence, but at the same time, intraday players are getting short to too short over here because they are not even able to break a previous day low. They are not even able to break a previous day low. And these are the places where intraday players get short to too short. It is a mean reversion opportunity. First to fade the C period single prints, and then to fade the B period single prints. Right. So this is the first setup. What you can anticipate. So that's what it happened yesterday also. We we talked about in yesterday's live market session. There are many odds that C period will be the day's low. So let me go back to the Nifty charts. This is again a clear setup that there are more odds that this day the C period could be a day's low. You look into how the letter A, B, C got developed. Price opens higher. It took a multi-day high. It doesn't matter whether it's taking a multi-day high or a previous day high. The only thing is that previous day range should be having a bigger range. Previous day's range was really bigger. That is the key here, right? That is where it allows you to have a ABC elongation on the reverse side. Otherwise, it could completely form into a different range. So one key identification is that how was the previous day's range? The previous day's range should be very much elongated, right? It was an elongated profile. Undoubtedly, 17th Jan is a very bigger elongated profile. That is one information that you have to look into it. And now you're seeing an ABC elongation. So letter A was like this, letter B went down like this, and letter C went crazily like this, right? So it was a crash of how many points? 10,965 to almost 10,875, 90-point crash it is. 90-point crash, but still what? But still what is happening? They're not even able to break down the, previous day's low. They're not able to penetrate to the previous day's low. If they would have penetrated, that is a sign of a strength, but they haven't penetrated, right? So that is a sign of a weakness. Most of such days, the C period low will be the day's low, most of the cases. And
sir, can we catch this first session, sir? Means 90 points down in ABC. So can we catch that swing, sir? Means it's a huge swing, no? So can we short around?
First, let's talk only about the trade setups. Then we'll talk about those things. We'll take it in the question section.
Sure.
Right. So first, let's complete the flow. Otherwise, the flow get disturbed. We'll be talking here and there something else. What I'm saying is that first thing is that you go and fade the B period single prints and C period single prints, right? So that is an intraday opportunity to fade those single prints. Because the C period itself lagging strength, if you look from the order flow also, when the C period is breaking down, there are no much volume was happening at the day's low, at the C period. Right? So C period volume was clearly lagging. It is an ABC elongation. It is ABC elongation. Most of the cases, C period holds for the day. C period holds for the day. And at the same time, price also having the odds of reverse. At times it only clears the single print, at times it goes to the other side also, right? So, but most of the cases it clears at the C period. So C period lows will be taken down there, or the C period will be the day high if at all it is breaking the multi-day high. For example, I'll show you one of the example which it broke a multi-day high with an ABC elongation in Reliance. We looked into Reliance, right? So maybe I'll pull up Reliance here. Reliance, we had an ABC elongation here. Let me duplicate in a new tab. I'll bring up Reliance. Reliance. Where we got? Is it Reliance or something else? Some day back we talked about ABC elongation in one of the structures. There are no ABC.
HDFC or Yes Bank, sir?
Pharma companies are Lupin, I think.
Lupin? No, not Lupin. Lupin, we haven't seen the series at all. It was ABC elongation, I think maybe in Axis. Yeah, this one. Here it is. So we talked about this ABC elongation, right? So this is also one more ABC elongation, but this haven't given enough opportunities, but it's a very small opportunity. That's what we talked about it, right? So here also, it was a 2-day high here, right? So if you remember this, it's a 2-day high. Price broken multi-day high with an ABC elongation structure. So let me put that as a 2-day high. This is an ICICI Bank. Price broken 2-day high. 2-day high. But we anticipated a bigger ABC elongation, which haven't came. But still, it is ABC elongation with a multi-day breakout, and you see that letter A almost broken the day high. Letter B broken day high, and letter C was breaking the day high. When the letter C is breaking, right? So you see that the letter C period low is exactly at the letter C period low is exactly at the 2-day high. Exactly at the 2-day high, the letter C period ranges. Right, so this is one information. Yes, maybe I'll try to highlight here. This C period information, right? The C period low was exactly at the 2-day high, and price went up. It is an ABC elongation. It's a ABC elongation, but the odds are very less because you can max to max expect price to go and revisit back. And whatever happened is just an other setup, but those are the odds that, but what you can see is that the C period will be the day's high. The C period will be mostly the day's high. If you look into these kinds of auctions, A period was a greater elongation, but B and C are very small elongation, but still it is a multi-day breakout. Those are the days where the C period is going to stay over there. It's very hard to break, especially when multi-day breakouts are happening like this. Okay, so that brings it is a mean reversion. At times, if the C period is extending bigger, you will get a bigger trading opportunity to fade. But this is a very small trading opportunity to fade, but it is a trading opportunity still. Right? It is still a trading opportunity to fade towards the B period. And once it is done, you're out of the game. But that opportunity is very small over here. It is hardly how many points? 3 points in Axis Bank. That is still close to an 0.8% price action movement. With a greater odds where the C period is where going to be your C period is going to be your ending place. Most of the time, mean reversion happens there. From the C period itself, the mean reversion happens. So that gives you a place to keep a tighter stops over there. The second case is, so this is second case. Second case is ABC elongation on a reverse mode. Reverse mode. So what is the reverse mode we talked about it? This is the reverse mode we talked about it over here, where the price opens and it completely drops, letter A period, come back into the range, and B period drops again, got back into this range, and C period completely drops. But the range here, the range is high. The range is very bigger. The range here is big. So you can select previous day range should be a big range. A bigger range here. In that case, this ABC elongation happens. You can expect C period to take a stop here and expect the auction to revert back. One of those places where intraday inventory is getting short to too short in this case. One of the cases where the intraday inventory is getting short to too case. So most of the time C period low will be the stop zone and price will mostly go and mean revert towards those single print zones. Single prints are your primary targets, and then if there are other weakness, you can still go and target the other weakness. But your primary thing is to go and fade the single prints.
Sir, that A single print also will clear, sir?
If there is more weaknesses there, we anticipated yesterday, but it haven't cleared it. But still, yesterday we anticipated, right? Yesterday we anticipated initially to fade the single prints. Later on, we also expected because that is a weakness. That is a weakness at the day high. So initially we expected what? We expected the price to clear those single prints. I said like it is an ABC elongation. It is a reverse auction. So it is one of the place where you have to go and fade the single prints. At the same time, later part of the day, we also expected price to go and clear this. But it haven't crossed. But still, what haven't happened is that the C period low is never taken down at all. Right? So that is one of the interesting trade locations. All those ABC elongation periods are interesting trading locations to go and take a take an intraday trade there.
All right, sir. Sir, if say B almost it's cleared, so where will be my exit plans as an intraday player? Where I have to exit, sir? If
there are no clues like this, then you can consider cutting the position at the single print zones itself. You are done. You're out of the game.
Okay, sir. Thank you.
Right, so at times it could be 30-point opportunity, at times it could be 40-point opportunity. It depends upon previous day range. If the previous day range is bigger and the ABC elongation is getting bigger and bigger and bigger, and still it is not breaking the previous day low, your trading opportunity is going to be significantly higher. Your trading opportunity depends upon how much is the previous day's range and how much is today's ABC elongation was going on. Bigger, everything is bigger in a high volatile markets, the opportunity is going to be bigger. But yesterday is a low volatile markets, so you should be able to get only a maximum of 30 points. That is a maximum point you can get over there in such kind of markets. But your conviction will be there that the C period is not a good. It's not a good breakout. But let me tell you that how this elongation could be a stronger one. Okay. First we'll record this information and then we'll move on to the next one. Let's say, so now what are the things you have to observe? ABC elongation on a reverse mode. So what you have to observe is that A period breaks multi-day high, or low, multi-day high or low. B and C period returns back into 2-day range with serious elongation, right? series elongation is happening, and previous day range is very high. Previous day range is very high, and the C period failed to break previous day low. So it is a sign that intraday inventory is getting long to too long, or getting short to too short, short to too short. Expect mean reversion. Expect mean reversion, or expect some sort of momentum exhaustion from order flow setups. Right? So if you're expecting that kind of momentum exhaustion, it can come in the form of a momentum auction reversal or big seller trap. Something market will try to show some sort of a momentum exhaustion. Right? So this is a complete mean reversion setup. What are the setups we talked about here are complete mean reversion patterns. But let's talk about continuation patterns on ABC setups. There are 3 continuation patterns I would like to talk about over here. Setups, continuation patterns. So every time the ABC is forming, if it is getting elongated or it is breaking multi-day high, or first ABC setups has to get you more trading opportunity. Okay, there is one more mean reversion setup is there. We call that as an ABC flip. It's a mean reversion pattern. So I call that as a third one. Third one is called as a ABC flip. It's called as ABC flip. It is also a multi-day breakout, or not to say multi-day breakout. It can come up with an non-multi-day or multi-day breakout. Multi-day breakout. It also happened with a multi-day breakout, or without a multi-day breakout also it can happen. But it mostly comes with global emotional gap downs. Gap downs are news-based gap downs. In fact, yesterday's activity is also, yesterday Nifty ABC elongation also, it's a sign that anyone able to recollect why the market went down like this, the first ABC elongation? It is because yesterday Sun Pharma news was hitting in the markets, and there was some whistleblower announcement also posted there in the Slack. You can go and check back the sentiment, what kind of sentiment prevailed yesterday, why the market went down. Sun Pharma cracked almost 9% yesterday. And that news made the gap up opening, it spoiled the gap up open at the open itself. Selling started. But Sun Pharma yesterday, it bottomed out in the first minute itself. If you go back and check the Sun Pharma charts. Right, so I think I put in the general section. So there was some whistleblower announcement with Sun Pharma, and the price went down yesterday. It almost made a 52-week low, I guess, very close to the 52-week low, and that hampers the sentiment of the Nifty. So because of that, Nifty fallen. It made the Nifty is able to make an ABC elongation because of that. But then that sentiment has been forgotten in the later part of the day. Right. So now we're going to talk about one more unique setup. This is a very interesting setup, which is going to give you the maximum odds. Right. So okay, it's not here. It's supposed to be here. ABC flip. This ABC flip is all about, it comes with a global emotional gap downs or any local news based gap downs also, but that is going to bring you more odds. I want to show you how the charts looks like. Or first of all, we'll talk about the setups first. Okay, how the setup could establish. Then I'll show you some of the past examples, how it worked out. It is called as a ABC flip. Let me take a new slide here. Let's say we have a 1 day low. So previous day low and the previous day high. So previous day low and the previous day high. Previous day high. So what happens is that market opens gap down. Market opens gap down because of the news. Maybe yesterday market would have been closed somewhere here. That would be a serious gap down. This gap down would be some 80 points or 100 points. It's a serious gap down. 100 points gap down because of the news-based reactions. Our global markets, Hang Seng was down by 4%. Our China is down by 2.5%. Our yesterday, the Dow Jones was down by some 2.5%. Because of that, all these global sentiments we would have been open gap down. But then price elongated. It got back into the range at A period. A period would have been got back in, but this A period range will be pretty high. The A period range would have been pretty high. And B period again went back down. It does a B period over here. B period does some good elongation on the downside. Next comes the flip. The C period would have been flipped towards the upper side. C period would have been flipped to the upper side. Right. So these are the places where market would have been, let's say this is 2-day high. 2-day high. 2-day high. Or a 2-day low. So this particular day, the gap down is because of global emotions or some local news sentiments. Market opened big gap down. Despite that, market came into the A period, back into the range, and B period got back down. There was a C period flip. It's a clear flip. Like it was like A or B, and it flipped. Or it could be A and this is A. B period would have been taken down. B period would have been taken down. Maybe it would have been taken down sharply, and C period would have been a complete flip. Whatever the C period sell-off was there, whatever the B period sell-off was there, C period would have been recovered everything, and it took a drive there. It took a drive there. So these are the zones where you can expect a complete spike till the end of the day. You can anticipate a spike throughout the day. This is a very classical pattern. If you are able to see this kind of patterns, you can expect a late complete rally. It's a continuation pattern. It's not a continuation pattern. It's a mean reversion pattern. But you have to go in the direction of the C period flip. At times it could be a multi-day breakout also. At times it could be a multi-day breakout where the A period range is very bigger. B period even breaks bigger. But C, despite that, C period completely flips. Instead of going down, it completely flips. The C period will be put back into the 2-day range or a previous day range. That is a sign that market is going to go and get the stops, because of it has to combine with global emotions. Without global emotions, we don't look into it. It has to be combined with some sort of global emotions. So I'm going to show you one of the day's activity. I want to share you the link also. So when to anticipate a short covering rally, especially when global market tensions are going on. So this is one of the day global market tensions are going on. It's where the previous day Dow Jones was down only by 0.49%, and the Dow Jones was 132 points down. Nasdaq was down by closely a percentage, right? Asian markets are going down, and the very next day the US markets are closed for that very next day because of Independence Day. Almost all the Asian markets are down by more than 1% or 1.5%, and because of that, we also opened the gap down. And price started going like this. So this is how the ABC flip looks like. We opened, we took a drive down. We took the previous day low, and B period also took the low, and C period they got a flip. The flip looks something like this. So this is A period. A period went down because of the global market sentiment, and B period, again the sell-off happened. Sell-off, if you look at the B period, the B period sell-off was exactly at the previous day low. B period exactly sold off from there. So that is the B period. C period does a clear flip. C period does a clear flip. Now, when you're seeing this information, when you're seeing an ABC flip, look at the surrounding auction also. Surrounding auction is like there is one prominent point of control, one more prominent point of control, and you can also see that this high and the other high are weaker highs. Right, so you're not going to get the same setup every time, but you'll be going to get some sort of combinations. One of the things it's saying that inventory is getting long to too long. I mean, inventory is getting short to too short because there was a back-to-back prominent point of control. There are two prominent point of control in a row, and there is one weaker references. Now you are seeing an ABC flip. If you combine all these information, what you can expect is a short covering rally towards the prominent point of control. There is a stop here, right? So there is a stop here. That is why there is a weaker references there. Price is not willing to accept down. This ABC flip is a early sign that there is going to be a serious short covering rally, which is going to hit the markets above this level, and this we already talked in the Slack as well.
A short covering rally means people are, they are trying to selling it. That is the reason it's moving, right?
People are selling because of global tensions. In the morning, people are selling because of the global tensions. Asian markets are down. Maybe you can watch the video listed over here. That could tell you what kind of tensions was going on. This is a 1 hour video. Maybe you can go back and check how they talked in the news channels, what kind of sentiment is going on, how the Asian markets are performing. Right? And we opened inside the range. We took the day low. B period also took the day low. C period got a flip, which puts the price back into the range. Right? That is a clue that combining with the other factors, the prominent point of control is the first target. Second target is towards the other side, and third one is to get the everything. All are the indication that the inventory is getting short to too short. The very first information is from the ABC flip. That is a very first subtle clue that this market is going to change and it's going to end up like a rest of the day. If you look into that, you'll be seeing only a short covering rally throughout the end of the day. It came like this. So there was a short covering rally towards the first point of control. There was one more, the double mechanical reference, or the poor high plus a weaker high. It's a poor high plus weaker high combination that got cleared. And again, they went on testing the third day high also. 3-day high has been taken out in a short. So most of the time you would have been seen why the global tension, because of the global tensions, why a short covering rally has to happen. But if you look into the information, what is presented in front of you, and if you're able to calculate what kind of odds it could suggest, that ABC flip is the initial clue which will onboard you to the complete recovery. So the ABC flips are mostly associated with global tensions, right? To summarize, A period breaks previous day low, and B period breaks down again, but C period flips and got back into the previous day's range despite global tensions. That this has to be associated with the global sentiment. That is a clue that then what you have to look out for is look for trading odds on the upper side. So this is only applicable on the downside. There is no such thing on the upper side. Right? Trading on the upper side, if more trading odds are there, expect steep rally. These kinds of trade setup happens especially when global tensions are there, and provided there are a lot of reference level to get cleared on the upper side, that ABC flip is the first clue to do a mean reversion trading activity. Right? Getting my point?
Sir, one question, like when they are telling there is a global tension,
Yeah.
then how did it rally back?
It rallied back because only weaker sellers are trying to sell.
Okay.
Institutions they don't care about it. Why should they?
So even global tension will not impact.
They will use as an opportunity to absorb to that positions. When global tensions are going up, despite that the price is still trading inside the range, that is a sign that point of control is most likely to build inside the previous day's range. Right? Because the ABC flip is one place where you can easily identify that it is not a serious seller. The morning sellers are not serious sellers. So price is going to rotate back. Point of control. What you have to watch is point of control. So expect or monitor POC building above previous day range. So these are the places where you can expect a steep rallies. Next comes continuation patterns. So this is ABC outside bar. It's called a ABC outside bar.
Rajendra?
Yes.
Yeah, you said A period breaks previous day low.
Yes.
Whether it breaks previous day low or A period opens yesterday's low, yesterday's low.
Either way, it is fine. Either way, it is because of global tensions. What happens? Okay, we can put it in this way. Like, let me open that. So A period, let it open like this, or let's say it opens here. It doesn't matter, but activity was happened like this. Activity happened like this. Either open can happen over here and then drop, or open can happen. It can go back into the range again, come back, and B period breaks. We're not bothered about where the price opened, whether it is a gap down open or an price opens inside the range. But there was a global sentiment that took the price down. And B period, it took further down. This is A period, and this is B period. But C period, it puts back into the range, puts the price clearly back into the range. That is where you have to think about the odds on the upper side. If there are any prominent point of control, weaker reference levels, or weaker highs, double mechanical reference stops, or two prominent point of control in a row which is not uncleared. So those are the zones. Mostly you can expect a short covering rally till the end most of the times. Most of such things happens with global tensions. Global tensions, your opportunity, if it is breaking an one day low or a multi-day low, price is getting back into the range. The odds of price going back to the other side is very high. Right?
Okay.
So next comes the ABC outside bar. It's an ABC outside bar. We already seen this example in ICC Bank, where price opens gap down. Price opens gap down, and it completely does an ABC elongation on reverse side with serious elongation and forms outside bar, forms outside bar relative to previous day. To explain this, I want to take the recent ICICI Bank example. I think no, not ICICI Bank, but S Bank example. So if you look into the S Bank example, one of the day we are talking about this. So there was a ABC elongation. Price opens here casually. Price opens here. It took the previous day low, got back in, it becomes completely rejected, and B and C, right? So probably if I try to picture it, it will be coming like this. If I try to picture it. So this is previous day high, previous day low. So previous day low and previous day high. What happens is price opens here, or price opens a gap down also. It doesn't matter where it opens, but the range was like this. The range was, it's a very good range. Price opens and then completely rejected. The range of A was really high, which puts price back into the range. That's a great retracement. And then B period again it retraces to the other side. C period it again retraces. A and B and C. So these are continuation patterns. Don't fight it. It is a sign of a strength. Don't try to fade. Don't try to fade this. Don't try to fade this. Instead, go in the direction of the continuation. Go in the direction of continuation at times. So these are the places where it forms an 5% move or a 6% move or a 7% move kind of setups. Don't try to fade this. That is the first thing it has to come to your mind. It's a sign of a strength, sign of a clear strength. Don't try to fade it. Even if you don't want to trade against the markets, let it go. Let it go. Even if you are scared of these movements, let it go, but don't fight against the trend here. Don't expect the price to go down and clear the resistance. Right? So
hello, sir. Yeah. Hello, sir. After 1.5 hours, we can know this is the strong strength. First, it is opened in the previous day range at the low downside. Yes. So how can we know this is the high confidence buying?
You never know. I'm talking about this trading setup. You never know. When you're seeing this ABC setup, first thing you have to do is that you go in the direction of the breakout. This is a sign of a clear strength. You never know what is going to happen in the market, but if this is happening, you have to go in the sign of a strength.
Okay.
See, you cannot able to reason every move in the markets, but if the market is moving in this set of patterns, but it is like asking a question like, how do I predict head and shoulder is going to form? How do I predict cup and handle will form? You never know what the market is going to do, but you will come to know when this market is going to form. You'll be able to justify whether this pattern is a strong pattern or a weaker pattern. What I'm saying is it is a stronger pattern. Don't try to fade this markets. Okay.
Sir, in this inventories, in the intraday inventory is not getting longer to too long, sir, in this?
No, it is not. It is not. It is not from the intraday players. It is from the stronger hands. Go with the direction of the stronger hands. Don't try to fade them, first of all.
Okay. Fine, sir. Thank you.
Right. So there are multiple ABC patterns. We are talking about it. All these patterns are all are intraday trade setups. Right. So how it is coming, what is associated with that, it matters. So I'm talking about an ABC outside bar. The ABC completely, it forms an outside bar. It forms, the price opens, it took the day low, but the A, B, and C alone, it forms an outside bar. By that time itself, we know that the day low also broken, the day high also broken. It forms an outside bar. It is a continuation pattern. And that particular day completely went like this. Don't try to fade. My morning commentary on that day was, it is a sign of a strength. Don't try to fade it. Right? So that day, it came like this. The second thing is ABC elongation with a single day breakout. That is again a sign of continuation. So here, expect price to rally in the direction of the direction of expect price to rally in the direction of what? ABC direction. Whichever the direction ABC is going on, so go in the direction in the remainder of the day. Fifth one is ABC elongation with single day breakout. Single day breakout. Right. So what we can expect in this case is continue in the direction of the breakout, or expect price to balance remainder of the day. Remainder of the day is where you can expect a possible P-shape profile, P-shape or B-shape profile. So these are the odds where a possible P-shape or a B-shape setup will mostly kicks in. So I'm going to store this document. So I'm going to share you once the day is over. So it will be like when you are looking from the pattern perspective, it will be mostly coming like this. We have a previous day high and previous day low. Clear everything. Either A period broken a previous day high with a steep drive. The drive was steep, right? So if you remember from the first 1 hour, first half an hour itself, you'll be able to see the pulse. First A letter is a steep drive. Letter A itself a steep drive. Letter B and letter C. There was no multi-day breakout, but it only broken the previous day high or previous day low. Right. So when you are seeing this A and B and C pattern, expect the balance to happen in this range, or expect again further to continue further. Maybe I expect again further this trend to continue further. This is a sign of a confidence. This is a sign of a confidence. If late A period itself, you are seeing a lot of drive. That's a sign of confidence. Even with the multi-day breakout, let's say a multi-day breakout is also a sign, especially if you're seeing like this. Let's say there is one more multi-day range is there. It's a 2-day high and 2-day low. 2-day high, 2-day high, and a 2-day low, 2-day low. But price opens above multi-day high. Price clearly opens above multi-day high. Price opens multi-day high, and it took a drive A and B and C. The range was really big. I'm sorry, I'm not able to show from the screen, but assume that the A period is a bigger range, and B period is also bigger range, and C period is also bigger range, but the entire range was happening above the multi-day breakout. It is also a sign of a strength, right? Expect continuation here, or a possible P-shaped profile or a B-shaped profile. Don't try to fight the markets. Or it is also an, let's say something like this. Price opens here. A period was a bigger plunge. A period itself a bigger plunge. A period itself, it took the price up, and B and C, it's happening. Don't fight it. Though this also, it's a sign of a good strength. This is also a sign of a good strength. Don't fight the markets. You can fight a mean reversion if B period and C period are breaking it out. A period is not a bigger breakout. The A period range is very small. But B and C are going really faster above a 2-day high. That is where you have to come and fade it. But A period itself taking a bigger drive. A period itself taking a bigger drive. Whereas B and C are continuing in the direction of the breakout. It is a sign of a confidence. It is again a sign of a confidence. When you should fade it, you should fade only, let's say A period started here, and B period is starting here, and C period is starting here. Then only you should think about mean reversion towards A and B and C period single prints. This is a mean reversion. This is a mean reversion pattern, right? So where the A period just broken only day high and B period is breaking multi-day high, C period is staying above multi-day high. It is a sign that you can expect a mean reversion of those single print zones. That is a fake pattern. That is a fake pattern where you can expect a price to mean reversion, where the intraday players are getting energetic and they are breaking multi-day high. They are taking a mean reversion. But A period itself are doing a bigger drive. It is a sign of a strength. B period staying above that. C period staying above that. It is a sign of a strength. Don't expect mean reversion. Don't try to fade those A and B period or C period single prints. Let it go. Not necessarily it has to get clear. It may form an P-shaped profile, or even the rest of the day it looks like a P-shaped profile, but still the price continues. I'll show you one of the example here. Such example I think I seen in Reliance once recently. We haven't discussed about this, but it is something like this. You see this day, 15th January. 15th January. You see the drive, how the ABC is taking it out. The A period, price opens gap up. It took a straight drive. It broken 4-day range. It broken 4-day range. But A period itself, we got a break. A period itself, there was a serious break. Price opens gap up. It took a straight drive, took the 4-day high. And B period also stayed above. C period also stayed above. If you look into that, if this is ABC elongation, but the elongation is not coming at the breakout is not coming at a B period or a C period. The A period itself for the breakout came. Multi-day breakout happened here at the A period itself. And then it was a ABC elongation. It is a sign of a strength. You're getting my point? You have to do the continuation. You can expect either price to balancing in the second half of the day, or still you can expect the price to go further up. All you can do is you have to continue with that, and you cannot expect these single prints to get a fade. Don't try to fade B period and C period single prints. Don't expect to try to fade this. It can stay there. That particular day, it can stay there. Not necessarily it has to clear, and most likely more higher odds that remainder of the day is going to be balancing on the higher side, which will mostly, it could end up in a P-shaped profile, which is a sign of a positional long, which is a positional long. Maybe it is not an intraday long. You may not get some bigger intraday opportunity, but that is a positional sign. It is an indication of a greater reversal. It's a great indication of a reversal. Don't try to fade it. It is a good auction. It's a very stronger auction. It's a stronger auction, especially when the B period, C period single prints are not going to faded. It is going to be a serious auction on the upper side. Don't try to fade either intraday or positional. Don't try to take a fade. Maybe they are fresh money buying. They're not just short covering rallies. They are just fresh money buying. Especially the B period and C period single prints are going to stay in the markets. They are a sign of a stronger auction, a great stronger auction, powerful auction. Don't try to fade it. Right? So what is the clue you'll be getting here? A period itself breaking multi-day high or a previous day high. A period breaks previous day high or multi-day high, and B and C drives in the same direction. Same direction is a indication of strength or a strong auction. Avoid fading. Avoid fading what? Avoid fading B and C period single prints. Right. So remainder of the day can auction higher or continue or balance to profile, but with serious positional long opportunity. opportunity. Don't try to fade it. And even the same ABC outside bar is also a sign of a greater trend reversal. It is a sign of a greater trend reversal. Sign of greater trend reversal from positional perspective also. Positional perspective. So it is an intraday opportunity also, ABC outside bar. At the same time, it is an greater positional perspective also. If you are shorting this, you should be aware about it, right? So it is a sign of a greater strength. Don't try to fade it. That is the first thing. Don't try to add to your positions. Or maybe if you are holding, yeah.
So expect possible P shape, right? Not B shape.
B shape on the downside if it is.
Or comments on high or something.
Yeah, expect P shape profile. Right, so
in reverse also it works in B shape profile, right, sir? This the same scenario.
I'll show you in US markets now. I'll show you how in the US market the similar structure happened, right? So how the auction, why I'm saying that auction is a serious bullish auction in US markets. I'm going to show you now US markets. I'm going to show you the similar ABC structure there. It's not how it happened once. I think it happened twice recently. Disconnect. Chart. I'll connect to US market database.
So in reverse also it is same, right? The concept is same. If it breaks.
Yes. In reverse also it is the same. That is one more setup I'm going to talk about it. That is the final setup, which is an indication of a continuation. Yeah. So let's. Template load ES Mini. If you remember ES Mini charts, I think we discussed last week about the back-to-back G3 high and G3 low, right? So maybe I'll right click, I'll go to indicators. So in the afternoon session, we'll be talking about each and every features which is there in Bell TPO along with the trade setups, and also we look into the scanners as well. So one of the setup I have to do here is, we talked about the G3, right? So G3 pattern, let's say last 40 days, bring me the G3 and uncleared G3 and uncleared G2. I said like there are two G3 patterns are there in the US markets. So these has the higher odds of clearance. So it's a back-to-back G3. It's an unsecured G3. At the same time, we're also having a back-to-back G3 low also, right? So what I said was we are facing a stronger auction. The previous auctions are very stronger. Why I said the previous auctions are stronger? Because you look into this elongation, how it is coming up. Look into this auction. It was an A and B and C elongation. That particular day, the C period is not broken and it forms a P-shaped profile. It is a strong auction. Again, here also A and B and C, it forms a stronger auction, right? It forms a P-shaped profile. It forms a P-shaped profile. The C period haven't broken multi-day high here. The C period haven't broken the multi-day high. It's still at the, look into the example. It's a ABC elongation. A. It broken only one day high, ABC, but it haven't broken the multi-day high. The C period haven't broken the multi-day high. It's pretty close, but it haven't broken multi-day high. So, and then the remainder of the day, it balanced. It balanced and it left a single print at the B period. It also left at a single print at the C period. So these are stronger auctions. When you're seeing stronger auctions, it's still market is going positionally good. Don't try to expect a positional mean reversion. Those will act like a strong support zones. The zones here, are going to act like a strong support zones. These are signs of a very stronger auction. Don't try to fade them. So this zone is a stronger support. And again, the support is getting revised over here. It becomes a strong support. And the market moved up. The market moved up. There are no signs of weakness. Here we got some, here again, one more ABC elongation came. So this is ABC elongation. You see this ABC elongation? Price broken down previous day low, got back into it. Again, an ABC elongation. This particular day also, it forms a poor structure. It forms a poor structure. But finally, that poor structure got a clear. But still, there are no weaker structure. There are no poor lows. There are no AB poor lows. There are no weaker reference level. There are no back-to-back prominent point of control. Still, the auction is continuing up. You see that every day, if you look into the auction every day, price is bottoming out in the first half an hour. That is also a sign of a strong auction here, right? And the price started going up. Still now, it is a stronger auction. Again, one of the day, the very first time we got a poor low, but still that day low was at the first half an hour. This day lows happened at the first half an hour. And again, one more day we gap down and completely done an open rejection reverse. It is still a sign of a strength. They continued further. And again, they continued further. They went up with a one more gap up. And this time they broken a day low. After a long time, they broken the day low for once. But still, the auction so far is a stronger one. But they are also nearing a kind of an completion of the zone. The final destination is 2690. That is the one they are trying to get it. Maybe once they get it, once they do some balancing activity, the next step could be a steep downtrend towards the steep downtrend. Maybe I'm not sure about the time frame, but it's going to be a positional setup. The expectation is to move towards the back-to-back G2 low. I mean, back-to-back G3 low. That means a bigger downtrend is most likely possible once they're going to reach 2,700 levels. Nifty is on the verge. S&P is very close to the verge. So think about what kind of scenarios we are right now in. Whether we are going to see some sort of a reversal over here, stronger reversal here, or probably we're going to get into a sideways mode till the budget, and then we are going to reversal that. But one thing is that we are very close to the upper edge. I'm not sure whether we are going to see some sort of a reversal or not. Definitely, we are going to get some clues. And in the afternoon session, I'm also going to talk about the possible top patterns and which is a top pattern, which is not a top pattern. Right? We are going to have a discussion on those possible top patterns and bottom patterns. We have closely identified some 12 to 13 patterns over there, which we are going to discuss about it. In the meantime, we'll let me clear with these steps. So every time the ABC opportunity is going to be elongated, it's going to give you some serious opportunity. At times intraday, at times even it could be from the positional perspective also. Right? Any questions here up to this?
Rajendra?
Yeah.
I think I missed actually ABC inside elongation. Anything we missed? ABC elongation inside range.
No. So this is the only final ABC elongation. ABC elongation with gap up, and multi-day breakout. Right. So this is the final one, which we seen in Reliance example, where it broke on A period itself. A period comes with a strong drive, taking taking multi-day high, and B and C period continues. Again, a similar continues. C period continues. In that case, that's a strong auction. First of all, it is a strong auction. Strong auction. I'm not sure about intraday, but expect positionally to continue. Expect positionally the auction could continue as it is fresh money buying from OTF, other time frame traders. Maybe what you have to look out for here is that you look for first 1 hour volume, how the first 1 hour volume is. First 1 hour volume gives clue about serious volume or not. It's first 1 hour volume. You compare with the other days of first 1 hour volume. As I said, you can always go and use your something like the trade action portal where they record a first 1 hour volume, or you can also use other tools like AmiBroker to generate first 1 hour volume. Say. So which day we got a drive in Reliance. Reliance. Let me pull up Reliance here. One of the day we got a serious breakout, multi-day breakout in the first A period itself. Reliance. Okay, it is this day, right? This day. Looking at the volume was first to 1 hour itself, it's a bigger volume. First to, it's a 30-minute chart, right? The 30-minute chart itself a bigger volume compared to the past historical thing. That is one thing. But if you look into the 30-minute, first 1 hour volume flow. First 1 hour volume flow, what date it is? That date is on
16th.
15th. Most of the confirmation you'll be able to get around B period, C period, you'll be able to get a confirmation that it is a strong buying. And A and B period completed. By the time if you come to know the flow, there was a strong elongation came in. And if you go to the scanner, it's under scanners, right? Not signal scanners, but scanners. Not this, market scanners, yeah. Volume shockers. Go to Reliance. Reliance Industries. Click on Reliance. Look for the first 1 hour turnover. On 15th, what was the average turnover? The average turnover was around 200 crores, 300 crores. And on 15th, it is 792 crores. First 1 hour turnover is not much bigger, but it is relatively bigger. So some bigger volume activity happened. Most of the times you can see the volume was around 300 crore, 400 crore. Very rarely it goes 700 crore. But if that drive, ABC drive is coming with a decent volume or with a very greater volume, then in that case, it is a sign of a strength. Look for some volume confirmation. The volume should be above than the normal. Okay, those locations you can expect volume is above than the normal here. It is not great, but it is above than the normal, at least compared to the last 30 trading days. The first 1 hour volume is relatively bigger, and it is an ABC elongation. So you would have been able to confirm the ABC elongation by here. It's ABC elongation with a multi-day breakout, but most of the breakout happened in the A period itself. A period itself, most of the breakout happened. B and C continued. It is the ABC elongation. So you should not fade it. It is a sign of a very great raw action from the positional trading perspective, right? So any doubts on this? Otherwise,
I have a doubt.
Yeah.
So as an intraday player, where I can enter, sir, if this is the strategy?
At the C period itself. The C period, close of the C period, you see that ABC elongation, it's a continuation pattern. You can, the key supports are intraday single prints in B period and C period. If you're finding those single prints, probably the B period is going to be the support. You enter and go long. Expectation is B period single print should not get clear at all.
Okay.
Right? So either the day could be end up like an P-shaped profile or a complete reversal. The only thing is that it is also brings a positional long opportunity if the day is going to end like a P-shaped profile or something else. Your stop loss is what? The single print should not get fade away on that particular day. The B period single prints or a C period single prints, if you are seeing, all these are indications of a stronger auction. You should not fade at all. Okay.
Thank you, sir.
And one more final auction setup. I remember that. This is a very rare setup. It happens at a strong reversal. It's an intraday setup also. It is a what? It's an ABC late reversal. We can call this an ABC late reversal.
Sir, before starting this, I have one more question, sir.
Yeah.
So this first hour, 1 hour volume in Nifty, sir, can we assume more than 1K or more than, what about Nifty volume, sir, here? First 1 hour volume of Nifty.
First 1 hour volume.
It will give a clue, right?
Should be higher than the normal.
What is the normal, sir, in Nifty, sir?
2 times compared to the yesterday, or 3 times compared to yesterday, or 5 times compared to yesterday, or 5 times compared to the last 5 trading days or last 10 trading days. More than 2 times or 5 times is what you can consider that as a bigger volume. Which is usually higher than the normal. That means they are not normal players who are taking a drive, or some serious players are parking their positions over there. They're building positions over there.
Yeah, I will come to know within half an hour, right, sir? I can take a position there itself. If it is a huge volume.
How do you know that it's an ABC elongation?
Oh, correct.
Here we are talking only about ABC setups. Maybe you may get other clues also. Who knows? Right? So you may be at the opening itself, you may be able to get a clue. But if you are seeing that ABC elongation, what I'm saying is that at that point, when you are seeing an ABC elongation, it's coming with a multi-day breakout where the A period range is only breaking multi-day high. That is a sign of a fresh money. At the C period, if you are looking into that, you are seeing ABC elongation. It is a continuation. I'm not saying that you have to wait for the ABC to set up and then you have to continue. Maybe you may have other clues which says that A drive is going to happen. Right? Maybe the inventory is getting long to too long, or maybe the price is coming down, coming back into the 4-day range. Again, it's a kind of a look below the balance and fail. So maybe you have to take the price at the opening itself. But despite that, whether you enter the trade or haven't entered the trade previously, late of the day, around 10:45, you are seeing that ABC elongation is happening with a multi-day breakout where A had given a significant contribution in the first 30 minutes. Volume was relatively high, right? So that first 30 minutes is going to give you the clue, and second B and C is going to follow through. They are stronger auction. Don't try to fade it. it's going to be a positional trading opportunity.
Hello, sir.
Yeah.
First half an hour trading money, you told trading money will come into the market. Then how this volumes happen in that first
most of the time? I'm not saying that every day. Whenever the market opens, first 1 hour will be totally flooded with the traders, right? And most of the times, institutions love to trade in the last 1 hour. But that doesn't mean like they have to. They have a fixed slot and they will trade only in the first 1 hour, last 1 hour. They can come. The smart money can come in the 1 hour also, but that is very rare. They are showing up. That means they want liquidity. They are driving up. They are the driving force who want to find the liquidity zone. They initially drive up the price. When they are driving it up, they are trying to find the liquidity. Means they are interested parties. They are driving up. Some serious money is coming into the markets.
Okay. Thank you.
So next comes the ABC late reversal. This is one more final pattern of ABC. This is kind of a serious break which comes at the C period, right? So again, don't try to fade this because this happens especially when at the market tops. At the market tops are inventory get short to inventory gets long to too long or short to too short. Especially this kind of break happens. So this will be slightly confusing, but it will be usually happening like this. Like let's say we have a multi-day range. Once it happened in Nifty, I had seen this happens a couple of times in US markets. Once it happened in Bank Nifty as well. But it happens very rare. This scenario, what I want to discuss, is very, very rare because top setups, it happens only at top setups. It happens only when the inventory is getting long to too long. Let's say I have a previous day high. I mean, it's 2-day low and 2-day high. 2-day high. And one more day, we have a strong pattern over like this. No, not like this. I'm sorry. We got a bigger range. We also have one more bigger range here. The range was relatively bigger. This is previous day high. And here is previous day low. Maybe some multi-day low. Let's say multi MU low, multi-day low. One more low is here. And 2-day high. So this scenario occurs especially when the inventory gets long to too long. Previous day price would have been closed higher. SGX Nifty will be mostly likely to indicate like an morning. If you look into 8 o'clock or previous day night, S&P SGX will be mostly 100 points higher. But then, despite the 100 points higher in the live markets, they open with a marginal trend. They will not break the previous day high. But they will slide like this. Like the A period will be coming completely went down. B period would have been completely went down. C period would have been broken really down. So A and B trades inside the range. Both A and B trades inside the range. A also haven't broken day low. B also haven't broken day low. But C period is breaking down faster with a lot of single prints. Just go in the continuation of the downtrend. So this is a slightly different scenario. We'll call that an ABC reversal. It happens only if the inventory is getting long to too long, or you're able to spot some sort of a top setup. It can be any other combinations or something like that. Where the inventory went long to too long. There's A, B, and C. It is breaking down. It is a sign of a strength. Go in the direction of the breakout. And where you find like A and B may not be broken, but C period, there will be a lot of serious elongation coming in. or maybe the B would have been come pretty close to the previous day low, and C period would have been broken completely with a multi-day breakout. This is a sign of a strength. Don't try to fade those single prints. Don't try to fade the single prints. Don't try to do this, because inventory is getting long to too long. We are getting a serious liquidation over there. So this is a sign of a liquidation. This is a strong liquidation. Just go with the flow. Right? So this is ABC late reversal. It once happened in Bank Nifty, I think. Let me check out if I'm able to get the charts. Somewhere in December it happened. We'll show you in Nifty charts. Nifty. Yeah, here. 1 and 2 and 3. There was a serious breakout. I'll show you. It's kind of an open drive. Maybe if you look from the profile perspective, you'll be seeing something like this. See, it doesn't matter whether it is happening in stocks or it doesn't happen. It happens in indexes. The sign of auction, it happens in US market or it happens in gold. It doesn't matter. The context remains the same, regardless of whatever the trading instrument you're going to use. The only thing is that you have to assess at that C period is a sign of strength. At the C period itself, you have to assess whether it is a sign of a strength or a weakness. Sign of a strength, you have to continue. Or if you're already holding positions, you have to continue. If you're holding some reverse position, you have to cut it off your position. If you're finding odd against your trades, or if you haven't initiated a position, you have to find a mean reversion trade over there. So again, it happened somewhere in December. Yeah, here. This is again an ABC elongation. People asked me that day, is this an ABC elongation this day? Should I have to do a mean reversion? Because they are seeing an A, B, and C elongation. I said, like, don't fade this ABC elongation. That's what my comment in the Slack group last time. Because the surrounding factor says that there is a serious elongation is going to happen, because this is a G2 high. This is a G2 high, which came in, which is still now it is not cleared. It's a potential market top. I mean, later on it becomes a back-to-back G2 high. Now we are expecting it to clear. But by that time, it was a major swing high, and it forms a G2 high at a major swing high. Price opens inside the range. That day, SGX 50 was indication of positive, but despite that, price opens inside the range, and it does a swing, but it's not able to do that. But A and B and C, there was a serious breakout. The C period, in fact, took a 3-day. It pretty closely does a 3-day breakout. The swing was really huge. My comment was that it is a sign of a reversal. Don't try to fade it. It's a sign of a confidence. The thing is, A and B traded inside the range. A and B traded inside the range. B traded does a previous day breakout also. It's a 1-day breakout also. It's a multi-day breakout also. Later it elongated like a multi-day breakout also. It is a sign of a strength. Don't try to fade it. Just go in the direction of the breakout. Right. So how an ABC elongation is coming in, that is what it really matters. So that's why the 6 classifications. So here, AB period trades inside the range, and the C period does a sharp breakout with a lot of single prints. It is a sign of a strength. It's a strong auction. Continue in the direction direction of the trade. So don't try to fade it. Avoid fading those things. Stronger positional reversal indications. So don't try to fade it. So I'm gonna share this. Once this session is over, I'm gonna mail you all these ABC setups. So 2 setups we had seen in. One is an look above the balance and fail, how to fade it. We've seen 2 things. One is look above the balance and fail, look above the balance and accelerate. What time frame you have to watch, we had looked into it. The second setup is 6 ABC pattern setups we had formed to check whether it is a continuation pattern or a mean reversion pattern. So we also discussed mean reversion patterns, 2 and 3 mean reversion patterns, and 4, 5, 6 all are continuation patterns. So this is a continuation pattern here. It's a ABC continuation patterns. So next time when ABC elongation is happening, try to understand which one to fade and which one not to fade. You can use this as a guidance. Some of them are positional opportunities, some of them are only intraday opportunities. Everything has been listed point by point, and try to spot charts. If at all, if you are spotting the charts, try to post it in the Slack so that your learning capacity increases, your observation skills improves. At the same time, you can also verify from my side whether it is a stronger indication or not. Not every ABC reversals are it's going to fade. Don't try to do that. It's a mistake. Try to observe, try to classify it, and try to. So these are the classifications on only on ABC elongations alone, right? Okay, fine. I'm going to stop here and I will continue the session again sharply by 2 o'clock. We'll continue some more intraday patterns. I think today we'll not be able to complete all the intraday patterns, but probably this will give you a fair idea how to observe that ABC elongation to identify strength. It gives you, all the ABC elongation gives you greater odds. But yes, very few ABC elongation gets very only small odds. But most of the ABC elongation gives greater odds to take a mean reversion trades or to continue in the direction of the trade, right? So I'm going to stop the session here and we'll again resume back by 2 o'clock. We'll talk about more intraday patterns, and then we'll look into scanners, and then we'll look into the trading features of Market Profile Ultimate, and if possible, if time permits, we'll look into the top trading setups. Again, that is again 12 trading setups. I don't want to discuss today. Maybe we'll take on some other day, because that is going to take a lot of time again. That requires at least 1 or 2 hours of explanations there. Right? Thank you.